What's up, everyone, and welcome to another Bitcoin market update. In these videos, you will learn how to use technical analysis to forecast price movements in your favorite cryptocurrencies like Bitcoin and others, and also see where we are looking to buy and sell these crypto assets ourselves. So let's get into it here with Bitcoin on the weekly time frame. Starting off here, we see that we're still operating within that light blue support zone that we've been talking about. You see we right now, currently at least, have a long lower wick on this candle back here from the 17th, and then another long lower wick here. Now, this is something that I've been talking about for several weeks now, and we need to watch the weekly close to see where this candlestick, what this candlestick is going to end up looking like. But right now, this candlestick is still lining up with the pattern here for a bear flag. And so the bear flag is a bearish continuation pattern, and this is when you have a drawdown like this, and then the price action goes either sideways or slightly sloping up, kind of like how I have these two parallel lines drawn kind of crudely, and then subsequently it continues to dump downwards. So this could be a bearish continuation pattern here. It's important to keep that in mind. If we do end up pushing through this blue zone and closing two weekly candles below this key low before bouncing off of this level, and potentially going up to something like the R2 or really just bouncing to any price, then this is really going to be a strong level. So if we just see the bear trend here, you can see we haven't broken a high of any of these weekly candles, so we haven't actually had a bounce here. We've just kind of went sideways. So we drew down and then sideways and then further dump. So that's what this pattern is showing us. The reason this is continuation is because it's very weak buying pressure. And the way you know it's weak buying pressure is because you haven't even pushed up to break the high of any of these candlesticks. So it's very weak buying pressure down here, at least at the current moment. We'll see what happens in the next 20 hours roughly, but right now it's not looking good for the bulls, and that's kind of unfortunate for me because I am in a long position, which I'll talk about in a second. If we do end up going up in the next couple weeks, the R2 pivot here is going to be our main resistance, and that's up at about $46,250. If we continue to go down, the next weekly support level is the weekly pivot, which is down at about 20,700, and after that it's this weekly level back here from December 7th, 2020, which starts at about $19,500. So I know it seems a ways away for now, but that's completely reasonable if we go through this light blue zone, which it's increasingly starting to look more and more likely that is what is going to happen. If we close this with a white candlestick and we're starting to actually, get some increasing bull volume, then that changes the weekly perspective here, because then we have two long lower wicks of people buying the dip, and we'll see the volume profile change from declining bull to increasing bull, because this will be a green candlestick if we can close above the weekly open, which right now is at 35,815 on this exchange. So we'll see how the weekly closes, and I'll update tomorrow with a video on that. But for right now, let's start off with the 3-day time frame quickly. If we look at the 3-day time frame here, there's a couple things. You can see that we had this massive drawdown right here, and then we had pretty long lower wicks here of pretty good buying pressure, came up, formed a lower high, higher low, lower high again. Now this was where it was pretty sad to see this follow through from the bulls, because of the fact that at that point in time we actually had a hidden bullish divergence here with a lower low in the RSI and a higher low in price. But you can see that the price action that we got after we pushed above this key high from this candle from the 31st was minimal at best, and then we dumped down for a lower low. Now luckily for the bulls, we didn't go and close two candles below this key low to continue a bear trend downwards confirm a bear trend downwards on the 3-day time frame. But it's still, not good price action for the bulls. Now for the bulls, this candle looked really nice. The problem here is, as soon as this candle opened, the next candle opened and dumped down, or I'm sorry, as soon as this candle closed, rather, this candle opened and just immediately started dumping downwards. So we didn't see really any follow through on this 3-day candle that we're currently in now, which closes in at 1 day and 20 hours. Now the worry here is that if we look at the RSI, we have the makings of a hidden bearish divergence here with a higher high in the RSI, but a potential lower high in price. And so we'll see what we end up getting, because you can see that these are both higher highs and this is a lower high, but on the RSI, this is a higher high. So that is going to be terrible for price to continue higher, but very good if you're a bear if we break the low of this 3-day candle. So if we break the low of this 3-day candle at 32,414, the follow through for that, I would imagine, is going to be pretty significant, because I'm guessing people have their stop losses below this low because we had above average bull volume here over this 3-day period. So let's go to the daily time frame and look at this main support and resistance levels. You can see this resistance level that we've been talking about for quite some time, this gray zone, has held up once again right here for a potential short opportunity. I did not take this because it is the second test of this zone. I did not trust this. I apologize for hitting the mic just now. And so you see that held, and now we also have this other blue support zone back here from the 31st of January when we had our bull trend breakout here. You can see that blue zone is held already, though, 3 times. And so every time we test this zone, it's getting weaker, so we need to keep that in mind. Now this zone is the zone that this gray zone right here is the zone that I was looking to go long on. I currently am long, but this zone you can see already is not holding up well. And that's because the sell pressure from different trend traders, I'm guessing, is pushing this through this zone. So if you look at like the Ichimoku cloud, I mean, this is about to be printing the most this is about to print the most bearish scenario that we can have. And so if you're a bear, it's fantastic. If you're a bull, obviously not fantastic, because the Kijun here, the red line, is dipping now back below the cloud. You can see the cloud is right here. It's dipping back below, and so now we're going to have the clouds red, the price is below the Tenkin and the Kijun, and the Tenkin is below the Kijun. So this is the most bearish scenario. It's important to realize that when you're in the most bullish scenario, when we printed that, back here, this is what happened. This massive run up in price, and so this trend following indicator helps you. The Ichimoku cloud specifically helps you understand where price might be going next. And so I really like this indicator. And so you can see that this is just beginning. And when this daily candle closes in 19 hours and 45 minutes, this is going to be most likely closing below the cloud, which will then validate the most bearish scenario here. Now, sometimes when you see the initial first candle close of this pattern being valid on the Ichimoku cloud, you actually see the price move in the opposite direction than what you would expect. So if we just printed like the most bullish scenario, you might see the price dump on the first candle that that pattern is valid, contrary to kind of what you would think would happen there. But anyways, this support zone down here is from when we had our bear trend right here. So we had our high, low, lower high, and then lower low right here. And then we had 2 candle closes below this key low. And you can see then this should have been resistance, but we pushed right through it and closed 2 candles above this white candlestick. And so this became a support zone, but you can see that we basically just pushed right through this zone. We had a little bit of buying right here, but then subsequently, we've just pushed right through this zone. So my stop loss right now has not gotten triggered yet, but it likely will soon. What in the heck? Oh, this is still from the weekly time frame. I was like, where do these lines come from? So if we look at this from a 6-hour perspective, my stop loss is below this candlestick right here. And the reason for that is because this has been a support zone here multiple times until eventually we broke through it. Obviously, it wasn't respected right here with the price action that we saw, but then once again respected it right here, and then now respected it again right here. So this is a valid support zone that I am keeping an eye on. So my stop loss is right below this low, which is at 34,178. So if I do end up getting stopped out, I'm fine with that. I still, these setups, these types of trades where you get a setup where the trend changes, you're supposed to have like a resistance zone and you push right through it and close above it, are typically really good zones to go long off of. And the opposite is true when you get the pattern with the bulls and then you push right through that. And that's what we've seen right here, where we have our bull pattern right here. And then this black candle is the zone to watch. You see we push right through it. And then once we retest it right here, here's your entry. Boom, we dumped down. So this is a good trade that I took and I talked about on this channel. And then here's the same exact pattern right here. And then boom, we dump below it. Here's the black candle that we're looking at. We enter right here on one of these two candles. And then boom, we dump down. Here's another scenario on the long side. So we have a bear pattern right here, and we break down, we push right through the zone, we come into it, we test it, boom, we go long right here. It's about a 5% trade. So these trades, if you get stopped out this is 1, 2, 3, 1, 2, 3, yeah, and then the daily one is 4. There's 4 of these trades. If I get stopped out on one of them, I don't really care because this trade was 8% on spot, this trade was like 15% on spot, and this trade was like 5-something% on spot. So if I lose one of these trades, and this is what you kind of have to think through as a trader, if I lose one of these trades and get stopped out on the same exact pattern, I'm okay with that because the other trades make up for this loss, and it's still a good, it's still a strategy that I want to run with, and so I'll continue to run with that. But what you do is you when you have a loss, you think about, how can I go about learning from this? You write something down. What did you do on this specific trade? Maybe you acted emotionally and you made a trade. I've done that tons of times where you make a trade based on emotion, you lose money, and then after the fact, you're kicking yourself going, why did I make that trade? Because you just made it off of emotion. So what I recommend and what I do is I have a journal, and whenever I make a losing trade, I sit there and I ruminate on that, and I kind of think, why did this trade happen? Did I not follow my strategy? If I followed my strategy, then there's really nothing to write down unless I think that there's something flawed with my strategy, in which case then I have to go back to the drawing board of like tweaking the strategy. But if I don't think there's anything wrong with the strategy, then there must have been some other mistake that caused it to happen, or maybe it was just regular market conditions. But nevertheless, taking the time to understand why that happened helps you refine your strategies and become more profitable over time, so you don't make the same mistakes down the line. So that's a key thing to keep in mind when you're looking at the price action. Last thing I'll say is let's look at the 4-hour time frame, and then we'll be done. So this zone that initially I went long on right here, we tested this 2 more times and we broke down through it. So now you can see when we retested it here, and here we broke down again, and now if this candle right here does not close back above this low from the 12th of June, which is yesterday, or today rather, is it still the 12th? Yes, it is. At least in my time zone it is. So this low right here is going to be the low that we need to close back above if we're a bull. If we're a bear, we want to see this candle close below the low because it'll make this white candle be a resistance zone because we have our regular bear pattern here. So if we're a bull, we really need to see, like I said, a close back above this key low, and then we need to see some more bullish price action thereafter. The bears are in full control right now. The trend is still bearish on the lower time frames, still bearish on the daily until we make a higher low and higher high. We'll probably potentially try and do that here with I was hoping on this gray zone, but I guess we'll see if that ends up actually playing out. If not, then we'll see where the price falls to. But that weekly close is going to be critical in what that candlestick looks like. So that's what I'm currently watching right now. So that's all I got for this one, guys. If you like this video, give it a like down below and subscribe for future educational content, and join our global Telegram community. You can find the link for that in the description below as well. This is where you're going to be able to collaborate with people from around the world on different crypto related topics, figure out answers to all the different questions that you might have, and you get to learn and grow with these people, and it's been fantastic so far. I've really enjoyed the conversations that I've had with all of our different community members. So check it out. It's free. You can join it for free and get involved today. So I recommend that. And that's all I got for this one, guys. So until next time, onward and upward.